Hi everyone, welcome to our latest edition of VFX Circle. My name is Hayley Miller. I'm the founder of World VFX Day, and I'm really excited to welcome Daniel Jurow today. Welcome, Daniel.
Thank you for having me, Haley.
Now, I'll let Daniel introduce himself properly, but just a basic overview. I really wanted to interview Daniel because we worked together at Technicolor at roughly the same time. And you recently wrote an article about the industry in general, but focusing on Technicolor. And it was super, super interesting. Before Technicolor, you worked for an advertising company, RGA, for about 15 years. But before that, you worked in music and technology, and your love for the industry brought you back to us after a stint, and then after your advertising role, working at Technicolor for a couple of years, and then moving on to DNEG. And since then, you're an operations advisor, which we'll get into a bit more detail. Over to you, Daniel.
Oh, well, thank you again for having me, Haley, and happy World VFX Day. I love that you've set this up. Such a wonderful forum, when we need it most, but hopefully it lasts for a really long time. Um, yeah, so I've been in the creative business, various creative businesses my whole career. I started in music. I was the chief engineer of a recording studio after I finished school. And that's sort of where I discovered, a love for bringing technology and process together for a creative aim and a commercial endeavor. And even though I've done a bunch of different things, it's, the through line, that's kind of always been it. From there, I got my Avid certification and moved to television. I worked at the Sci-Fi Channel. It's called Sci-Fi now, but back then it was called the Sci-Fi Channel, and doing second screen content for sci-fi.com. That was back when we thought that the internet was sort of going to take over from linear television. And I think we were right, but I also think we were early, a little too early. But it was a great run, really, really exciting time, to be there. And then I started working on set at Nickelodeon on a live kids television show, which was really fun. And then finally, I did join RGA. This was 2004, it's a long time ago. RGA had started as a title and effects company. They moved into commercial post production. But by the time I joined, it had changed again, to become a digital agency. And I joined to work on this amazing Nike business, doing Nike running brand, Nike ID, Nike Plus, these sort of wonderful kind of digital experiences for people. The 15 years was incredible. When I was there, when I started, we were 200 people just in New York. And by the time I left, it was something like 2,000 people in 18 offices in 11 countries, a lot of which I helped to open. I got my MBA while I was there, and that's when I sort of learned, and learn to appreciate and to participate in the business operations of the company itself more than, for our clients. Then I was called back into entertainment. That's when I joined Technicolor. I was the chief operating officer for the visual effects, the film and episodic visual effects division. And then after that, I was the global chief operating officer for DNEG on its journey when it was doing a transformation. And so, the through line has always been to help create change, while helping creative people do the best work of their lives. That's what it's always been about for me. And then after that, yeah, I started Sevoir Group, which is a consultancy specifically for creative businesses, given that I've worked in, across all these different industries. They don't typically call management consultancies for help, and I think that's the issue. So making one that was, full of actual operators, folks from the industry who've, lived the work and know the industry really specifically, has a foot in either marketing or in technology or in entertainment, visual effects, animation, right? I think, we can bring the help when the help is needed and in a very sort of economical way. So it's been really fun.
Yeah, I mean, I'm sure there's been a lot of challenges over those years as well. But we don't have that much time to go through all of those. But I do have a lot of questions. So I wanted to just quickly go back to your time at RGA. Of course, you were there for 15 years, very long time. Um, I feel like, in a way, the VFX industry is kind of set up like an advertising agency because, in terms of the sort of business model, perhaps, and the way the interaction with clients for new business. So, the bidding and changes throughout the project and that sort of thing. What do you think are the similarities between the two? And does advertising tend to do better than our industry from a business model perspective?
It's a really interesting point. It's to me, it's sort of like when you visit a very different country for the first time, and everything is the same, but it's also very different. The
Yeah.
lights work differently. People cross the lights. We're all kind of doing the same thing, but n not really. It's a little bit like that. I think what you're getting at is that the industries are both set up w with a similar issue, which is the client supplier dynamic, right? But they have very, very different solutions to those problems. And in some ways, I think advertising agencies do things really well. In some ways, they don't. It's different. So, for example, with contracts, the number of clients, the number of agencies, and the reason that creative agencies especially get chosen to do work, it means that there's a more balanced negotiation than in VFX as it relates to setting up initial contracts, service agreements, statements of work. When I looked after an amazing legal department at RGA, and what we were able to do was kind of drive a wedge between clients who really wanted to work with us, the business clients. They knew the value that we drive. And, if their legal team was asking for something that was pretty unreasonable, and we were reasonable in our response, our clients would often help us to get over the finish line. And in visual effects, it's not really like that. There are too few VFX studios, too many of us, and the VFX clients, they tend to just sort of leave it to legal more or less, and so it's a little bit of a harder negotiation. So that's a little bit different. I think another thing commercially is how they handle scope creep, because they're both in the business of trying to make money on project work, right?
Yeah.
Um, Agencies kind of start with higher margins to begin with, and so that offers a bit more flexibility. And also, and what that means is they're typically less good at recovering overages. In visual effects, you start with kind of a thin margin, and a really serious overage, can mean it can be make it or break it as it relates to the business or the work or the client. And so there's much more process around doing change orders than you'd see in advertising.
Right.
Where advertising really loses, Haley, is on the cost of winning. Um, Agencies and the expectation from clients is that you're going to spend a lot of money on spec creative, and you're going to put a lot of time and energy into pitch theater. And instead of doing R&D or innovation, they spend an enormous sum on a year by year basis on kind of pitch theater, whereas in visual effects, it's much, much tighter. Um, Another one is approvals. Very different. Okay, so again, you're not done until the client says you're done. That's very similar, and these are both subjective, businesses. Is the campaign good enough? Is the visual effects good enough? Right? Who's to say? Um, in VFX, it's actually kind of a tight group. There's only so many approvers, and once the studio gets involved in approving, that can be very, very difficult. And if they're approving on a shot for shot basis, then you've already lost. So it's a tight group of approvers that you manage very carefully, and that means there's a tight group of people who are put in front of our VFX clients and directors and the creative leadership on the production side. In advertising, it is so much more complex. There are layers and layers of approvals across many, many different departments, sometimes for a campaign, for a big brand change, even for an execution. And so, therefore, advertising businesses are very much structured around those relationships. They have broader and deeper, marking between sort of client and agency. So there's lots of folks doing that, compared to VFX, and that makes VFX much more vulnerable when things are going wrong.
Mm.
So yeah, I think those are some of the interesting differences. But yeah, on the surface, They're both trying to deliver creative work and find a profit from delivering it efficiently.
Yeah, it just seems so complicated and a lot of headaches in the process along the way, but it doesn't seem like there's an alternative method to that.
Oh, it's like haiku. I mean, if you don't struggle a little bit, then how good is it? So it's worth the struggle.
I love the pain. Oh dear. So as I mentioned, you've written this awesome blog article, and
Thanks.
for anyone who hasn't read it already, you can go to Sevoir Group and find it there, or just Google Daniel Jurow Technicolor, and it'll pop up. It had a lot of engagement, a lot of reactions, and I'm just really glad that you did that. And I guess. So you kind of unique position because Technicolor obviously closed, so you had more freedom to talk about it, I suppose. And it's just a really good lesson for our industry. So you've really done us a service, I think, by doing this. In the article, you talk about the warning signs, and I wondered sort of what warning signs typically crop up first, in your experience, from a sort of operations and financial point of view?
Oh, thanks, Haley. Well, so the reason, first of all, the reason I wrote the articles, because obviously we were all shocked and everybody was talking about it. I no longer worked there, but it was a big shock and a devastation to an extraordinary number of people, and the question of why came up, but never the answer. And focused on some of the minutia instead of what I think was you could say an inevitability because it goes back a lot further in time than just the last decisions that the company made under its new CEO or under the CEO who was before her. Um, and I wanted to write about that. I wanted to actually share kind of some structural reasons why it happened, because even after I left and I had no more access to any information, you could sort of see the way things were going from the outside. And so it was worth sharing, worth giving people a reason to understand. It doesn't make it predictive necessarily, but I think it's still a good lesson, whether you're in management in the industry or even an artist, just to understand a little bit more about the industry that we're all in.
Mm.
So there are patterns across companies, and the biggest one as it relates to is a company going to sort of survive or not. It's not the small stuff, it's debt. It's really about debt. It's very much like when you or I agree to take on a mortgage. Can we afford those payments every month, come hell or high water, or not? And that is the difference between having a place and being in financial ruin. And it's no different for companies. So actually understanding, even for privately held companies or closely held companies, understanding how it funds its business tells you everything you need to know about whether it's going to survive and can even predict some of the strategic moves that it makes later on. And I think that's what sort of happened here. So the first thing is to understand the debt service. And in Technicolor's case, for a very long time, for the better part of 2 decades, its debt service was significantly beyond industry norms. By the time COVID hit, their debt service, what they paid every month in debt service, was something like 9 times what another healthy business of a similar size, also in a creative business, was carrying, and that's just a gigantic sort of red flag. Um, the second kind of pattern is around businesses change, and that's what I do for a living. I help businesses to change, and it was RGA that taught me that ethos of change is good and how to do it respectfully and healthily, and follow your market, your audience, and be sort of ahead of the game. But there's good restructuring and good change, and then there's sort of wild or poorly sort of considered change. And when financial restructuring is done basically because of the debt issues, instead of change that would generate business improvements, that's when you can really see that problems are afoot. Is that always the case? No. And can you tell the difference between a good restructure and a bad restructure? I mean, it depends. It really depends. Not everybody's an expert in that, but that's, I think, what we're looking out for when there is a hasty carve out, a hasty change, a hasty set of mergers. What I did write about in Technicolor's case when I arrived, I was surprised at the actual pace of change, the numbers of big moves that the company was trying to make in, an unprecedented short amount of time, like 6 months instead of the 18 months that it would normally take. So this sort of hasty, kind of financially oriented restructuring, as opposed to restructuring that's, good for business, is a massive warning sign, I think.
Yeah.
And then the last, one, well, I mean, the last one, there's lots of them, but I would talk about strategic incoherence, which is meaning the company as a whole is not rowing the boat in the same direction, whether we're talking about the company fighting itself or the company hurting itself. When you're seeing, the effects of that going on, I think that there's lots of problems afoot. And then what comes of that is the client confidence issue, right? When clients stop being confident in us, or in the business, right? Then that can become sort of a death spiral because the work goes away, and then your capabilities can't be funded, and then your capabilities go down, and then people stop hiring you, and you're in a very, very difficult set of circumstances. So I think those are sort of the big ones that that we can learn from what happened at Technicolor. I'd hate to say that was all of them, but that's certainly what I wanted to, people to witness and reflect on, and for leaders to think about in terms of their own businesses, which are all very, very different from Technicolor, but to keep it that way, basically.
Yeah, well, thank you again. I was really pleased to see it because having worked there myself, I think I commented on your article. It was such a convoluted process just to even get a invoice through.
Mm,
Drove me mad and it drove a lot of people mad.
yeah.
So yeah, but shout out to anyone from Technicolor watching this. And please, anyone watching this, please do read that article because it's super insightful. Um, just sorry, this isn't an official question on my list, but because you were talking about clients, and the instability of our industry, do you think that's partly the reason why the likes of Netflix and Disney have acquired VFX studios to have more of a security of that, the studio won't go down kind of thing, which is a little bit ironic in a way if you think about it. But do you think that could be a reason why clients are interested in acquiring studios?
Oh, I think they have very different sort of reasons and strategies, and of course, Sony, they have their own visual effects capabilities and animation capabilities. Disney got ILM as part of acquiring Star Wars. That was part of the package. It's by taking all of Lucasfilm. So very, very different strategies. Um, I, I can't speak for them. I would say no. I think it's in their best interest to have a vibrant and independent, supply chain. It's not always that helpful. It's good to have some capacity, and you can see when they take advantage of that, when they have their own capacity, they can make their own decisions. They can invest in technology that maybe they otherwise wouldn't, and move the industry forward in some great ways. I think that's true. But no, long ago, I think they decided that the best thing to do was to put the delivery and financial risk of delivery around sort of fast-moving technologies like this, as it relates to the visual effects and animation industry, we're sort of better suited to third party. And I don't think that's really going to go the other way back. But there are always reasons to have some capacity sort of, internally. So we'll always, I think, see a mix.
Yeah, okay, that's good. Now, hypothetically, if you're an investor, I mean, maybe you are, I don't know. But knowing everything that you do know about our industry, would you invest in a VFX studio or a VFX group? Big question.
Yeah, That's no, it's a great question. The answer is selectively yes, but only with other investors who understand the industry. I talk to investors a lot, and some say, "Oh, it's like manufacturing," or "Oh, it's like technology." No, our industry is like neither of those. It's not like manufacturing with high volume sales, right? And it's not like a technology company with this sort of low marginal cost of sales and these network effects and flywheels. And it's not that at all. This is a high fixed cost business with volatile revenue and subjective definitions of done because we're here, to satisfy a creative endeavor. That's what we do. It's its own thing. So I would be looking to work with leadership and other investors who understand that, who know what it is, and aren't sort of trying to swim across, the riptide, because they're going to get it wrong. Actually, I think you should swim across the riptide if I understand, swim safety.
Yeah, I always forget that. Should you stay still or float?
Whatever. I don't want to drown with other investors who have the wrong idea. So what would I look for? If I was investing, I mean, I would look for obviously a company with great leadership, full stop. Smart folks who know the business, who are invested in it, who have set up a culture of creative excellence, and support, and encouraging people to do great work, and a delivery history, and a recent history of delivery. If a company is considering selling or is looking for investment, what's really interesting and important is what's going on right now. So a current history of how they deliver would matter a lot. It would matter to me whether or not the company is packed with visual storytellers, people who understand our medium brilliantly and can deliver incredible, innovative work, with a future-facing service model, right? Thinking about where the industry is going, not where it's been. If you look at DNEG, Framestore, Weta, ILM, and all the stable mid-sized studios who've weathered the most incredible set of downturns, they're doing some of the same things. They are diversifying their revenue, they are obsessing over the client experience, and they respect the volatility. They recognize that, it can, I mean, I spent 5 years just getting kicked in the head by the industry, and we all felt that way a little bit for a while. And you have to respect that that's possible, and you have to build your organization to endure, to be durable during that. And so that's sort of what I'd be looking for. I think there's going to be more consolidation coming up, which is an opportunity for really well-run businesses. So yeah, my answer is yes, I'd invest in the industry, but eyes wide open about why and what you're after, and to be part of that mission, as opposed to trying to work across purposes.
Yeah, thank you. Now going back to your blog, you mentioned, and obviously we all know that at the time of closure, Technicolor had a lot of amazing talent still working there. And as I'm based in the UK, I was thinking, the UK employees we're not really protected if a company folds and goes into administration. So we've seen that with studios that have closed recently, where employees haven't been paid their last payment and things like that. What protection can we do for us, find out for ourselves? Are there signs that we as employees can look out for, and what are those?
It was heartbreaking. I mean, I knew a lot of people who were still working there at the time of the closure, and very, very talented people who had nothing to do with the problem were blindsided, and in a lot of cases, left short. They didn't get paid for a full month of work, which I think is, I mean, it's just shocking. The reality is that that kind of information is very carefully locked down, and you can't know for certain. I've already sort of described how you get into this sort of pickle, but there's no guarantee that you're going to know when bad things are happen. But what do you watch out for? You're watching out for rushed changes and erratic changes of leadership, client pattern changes, unsustainable pricing or desperate pricing. You're looking for, because cost cuts happen. Deferring important infrastructure investments, that happens. That's not a sign of anything. It's, especially in, where we are today, you just can't know for certain. So my advice to folks in the industry would be, to stay aware, but not to become paranoid, really to focus on the things that you can control, which are your skills, your career path, and your network. In some ways it was very interesting to see all folks, a huge flood of people were suddenly unemployed with no heads up that this was coming, and some started their own shops, and some found jobs right away. Some are unfortunately still looking. Some have moved on to the industry. They're out of the industry. these are the things that you can control. And I think that's what people should focus on, because I think sort of second guessing whether, the company you work for is doing the right thing is at best kind of a parlor game. It's really, really hard to tell unless the signs are sort of achingly obvious. And that means that it's pretty close, is what I would say.
Yeah. Well, yeah, I guess I think still a lot of our industry are out of work, unfortunately.
Mm.
But yeah, if for anyone watching, there are some support and resources on the World VFX Day website, so please check those out. Now, again, you highlighted several warning signs. How realistically so looking from the inside out, can the leadership sort of realistically monitor these on a day-to-day basis? Does it come out of nowhere sometimes, or is it more kind of chipping away day by day?
Unfortunately, it can come out of nowhere, which is really terrible for if you're, in executive leadership and in a business. So, what I help companies to do is to build a regular rhythm. You might call it boring, but it's not, where leadership is exposed to the more than just how a project is going. And of course, we live or die by the success of our projects, but to really get into and understand the cash flow of the company. Okay. Like I said, companies don't die because of this, that, or the other decision. They die when they run out of money. And that's what people have to be aware of. So monitoring and understanding the health of your cash flow and what you spend your money on and where it goes is really, really important. Understanding your sales pipeline better is really important. And especially your client satisfaction, right? Very few, we talked about advertising before. In advertising, they obsess over client satisfaction because it can be predictive as to whether this relationship is going to continue to the next project or not. And I don't think we do that particularly well in our industry. And I think we should be much more obsessive over that and track it, and not just through stories. It's not about anecdotes. We tell stories all the time, but really what we need to do is as objectively as we can understand, the strength of our client relationship, and there are tools and techniques to do that really, really well. um, Tracking key people and turnover, right? Losing folks is meaningful. And when your key folks are all sort of, heading in a different direction, what is that telling you, and what strengths do you lose when that happens, and how quickly are you to adapt to it? Monitoring, for example, the bid to win ratios, right? And very carefully. Because if you're obviously, it's bad news if you're not winning very much, but if you're winning more frequently than you should be, or normally, are you buying those wins? Is it because your pricing is off? These are things to be looking out for. And, most importantly, make a bad news travels fast culture where nobody can sit on a problem, whether because they're hiding it or because they're terrified by it, or for any other reason. You really, the worst thing that can happen in our business is surprises. So make it rewarding to share the news, to share what's going on, to be transparent about problems, about struggles, about issues, so that people can rally, even as it relates to whether the clients can help. I don't think we look to our studio partners closely enough for help when we need it early on, and sometimes that ends, really, really badly. All of this can be fairly simple, even for small shops. It doesn't, I'm not talking about big kind of enterprise level, ERP solutions and dashboards and whatever. It can be just a matter of, are you transparent, and do you have the right culture of sharing and the right culture of information over storytelling, to be able to make, the best decisions that you can.
Yeah. Spot on. I think from a marketing perspective, it's definitely one of the things that comes up so often.
Mm.
Just knowing you need to know about your customer, your client. And I just found that information so hard to get half the time because people are just like, oh, it's fine. We've got a good relationship. We don't need to ask them if everything's okay. They've come back to us. And I'm like, but why? Why are they coming back to us? Know that so we can do it more.
Yeah,
So yeah, I love that answer. Thank you. Um,
exactly.
so you've obviously got a fantastic experience across a range of different companies, and obviously through your advisory group now, I'm sure you're speaking to a lot of different types of companies.
Mhm.
What would you say people or studios or companies are doing best that makes them successful typically? Is it a great, strong leadership team? Is it a really focused 5-year business strategy? What typically is that?
Oh, the number one thing for me is that they're embedding the lessons of the last 5 years, like really making it core to how they operate. Um, and that means a few things. Like, for example, a very different relationship to growth and feeling like you've earned growth as opposed to having bought growth, right? There was a belief that, there's a scale economy, so the bigger you are, the better you'll be. And that's just provably false in a lot of ways, and especially right now. So you earn growth because your work is great, because the client experience is great, because they reward you, and because you can make the financials work, and because your people enjoy working there, right? That's when you're growing, because of that, and because you have the right strategy. Great, you've earned it. Grow away, right? Keep growing. But if you are buying growth by desperate tactics and zero margin bidding, that is a recipe for a kind of disaster. And so I think the companies who are doing well are a lot more relaxed about growth. Perhaps it's less sexy, for the investor community, but at least it means you'll still be in business, which I think is that comes first. Another lesson, from COVID and strikes and all of that, and the honestly the ever-changing strategy of the studios and distributors, is that you have to have nimble operations built into the business. It's less now about fixed assets, owned technology and high capex real estate. It's about the ability to scale up quickly with the overlapping businesses as they come in, as well as scaling down for those gaps and being able to fund your core operations. So being much more nimble. I'm seeing really great companies, companies no bigger than 7 to 10 people, even who have taken that on board and rethought their entire pipeline and how they operate and their relationship to artists and how they can run a business more nimbly while still making it a really great experience for people.
Yeah.
The other thing is diversification, right? Don't put all your eggs in one basket. Chase more than one client, more than one industry. Get into and use the talents that you have for other types of work, so that if, for example, Hollywood decides to have an aneurysm, it's not the end of your business, right? And so I think that's a big part of what they're doing right. And then I mentioned that sort of client obsession, right? It's very strange to me that, I don't think we all have enough. I mean, most people do, but not everybody has the kind of the empathy towards the client experience. They want to get out of their homes sometimes, their offices, their sort of corporate buildings, and they want to come to you and have a good experience looking at the work that they're paying for. So why aren't you giving them a good experience, right? Like that's really, really important. And similarly with even just production management, they want to know how they're doing with the work, and why would you put bad information or bad data or like poorly constructed status where it's really confusing? Why would you do that to them? I think being obsessed about that client experience is very much part of stabilizing the business and growing. And then the last piece has to do with the audiences. Okay. We shouldn't be just obsessed with ourselves, our competitors, and our clients. We should be obsessed with the audiences, because that's who our clients are obsessed with, right? The studios are looking at audience behaviors, how they're changing, and trying to, be there for them with groundbreaking kind of entertaining experiences. I think we have to be right there with them, future planning our business on the basis of where audiences are going.
That is such an awesome answer. Thank you. And you just speaking my language, because from a marketing perspective as well, it's exactly what we just crave to do our jobs properly. So
I,
yeah,
I I am a marketer too, Haley. I think
yay.
that's why you're like, yes, I get that.
Reviving, reviving. Thank you for that. So, Daniel, where is the increased operational risk when companies grow too quickly, and why? You just briefly mentioned that in your last answer, but can we dig a bit deeper?
Yeah, sure. I mean, look, growth isn't inherently risky by itself. I mean, good companies grow, and when a company's really hit, that just gotten their stride, then they go into a phase that they call hypergrowth, and that's actually okay. It's challenging and it requires the right people doing the right things. I think the way to think about it is that the risk is to be operating and behaving in sort of the wrong operational phase of the life cycle. And what I mean by that is, let's say it was a great boutique business, 300 people, and moving quickly, making things work, doing a lot of kind of bespoke or handwritten processes. Um, Doing that when you're at scale, that's really dangerous. There's a lot of things that go wrong unexpectedly when you use boutique systems, at scale. Another example is if you are spending kind of loony amounts of money on CapEx, overbuilding departments that you don't need too early when you're too small, right? That can create a tremendous risk as it relates to growth. Basically, the systems have to match the actual size of your company. And so, if you want to build a healthy company, you build one that is prepared for a kind of constant operational evolution, building things as you go, taking things out as you go, and matching the moment, right? That's the most important thing. I don't think there's anything wrong with growth per se, but I did say there is bad growth, and I think, like I said before, the companies I admire are the ones that are a bit more circumspect about growth, and it happens because they're successful, not because they need it to happen. I think that's a very, very different attitude towards growth.
Yeah, thank you. And sorry, it's another question not on my list, but just as you were talking, I was just wondering, because of our business model and all the overheads that we have as an industry, does it make sense anymore to have bricks and mortar, an office for people to go to?
Oh, that's such a good question. I mean, the answer is yes, but for very specific reasons and moments. And even in my business, my business is fully remote, but the ability to have a neutral space to come to and, sort of leave the other stuff behind and focus is really important. And that's true in any business. So yeah, I'm kind of like a hybrid is good, a thinker as it relates to businesses. But also there are moments in a project's life cycle from first meeting a director or a cinematographer to kind of demonstrating your latest and greatest capabilities to kicking off a project or the first time something goes wrong on a project or we're late and we got to move quicker. Those are milestones and honestly success at the end, celebrating at the end. These are moments that involve a certain amount, even for a global organization, but they involve a certain amount of local, a certain amount of togetherness. And I would be focused on building, the operation around those moments in particular and having enough space for that. And there will be people who really want to work together and want to actually, be in the office or in the studio or in a controlled environment, for lighting and this, that, and the other thing. And then other folks who won't. So I think it's important to have, again, a flexible approach to these questions for different sort of possibilities. So I wouldn't say, kind of brick and mortar kind of office structures are dead, but I think we would use them in a very, very different way, and it very much depends on the moment.
Yeah, thank you for that. It's always nice to get together with people as well. There's definite lack of that now. On to leadership.
Mhm.
What role does a leadership, in terms of the culture they create, play in either averting or accelerating a collapse of a studio? Is there a sort of typical thread to that?
I mean, again, every situation is going to be very, very different, but clearly leadership culture is sort of the keystone in this operating structure. If it's wrong, the whole thing falls over. So it's very, very, very critical, but it's not the only thing that can go wrong, and it's certainly not the only thing that can be responsible for, a terrible collapse or change of fortunes. There's like an endless list of ways you can get your company wrong. The ones that interest me the most are, for example, a business with great doers who've risen up over time to become managers and then become leaders. But the business doesn't do leadership training, mentorship, slowing that pace of kind of accelerated career development so that people are ready. It is a very, very different thing. The roles and responsibilities of leadership are just so different, than what it was like when, you had your hands on the work, in quite the same way. I think that often, ends really, really badly. Um, I look out for leaders and leadership culture where they stop listening. Um, Look, I respect people who've been in the industry a lot longer than I have. But that phrase that I've been doing this for 20 years, I've been doing this for 25 years, that doesn't give me comfort. That's actually a red flag to me. Because what do you mean? I want to know what you mean when you say that. Do you mean I have all the answers and I don't have to listen? Because you think that the patterns from before are going to be the patterns again? That is a giant red flag. Or are you just sort of saying that you're, intimately familiar with the business, including where it's going? But either way, I don't think we should walk around with that. I think we should walk around, with curiosity and a bit of humility, given everything that's happened. And none of which was, I didn't see anybody sort of, anticipating that and raising the flag about, a double strike, sort of nearly wrecking the ship. I put less stock in that and more stock in leaders who do listen, leaders who have a succession plan, where they want people who are stronger than them surrounding them. That's a great leadership team, and that's how today's media moguls. That's the kind of environment that they grew up in, and we should be building those kinds of businesses today. The ones who are going to release the next David Geffen or whomever, right? Jeffrey Katzenberg. We should be building businesses where we're happy to have people like that, in the business, and thinking about succession not as a threat, but as an opportunity to be stronger. That shows confidence, that shows humility, and that shows listening, and that's how you adapt to trying or changing circumstances. And ultimately, look, you need a leadership culture where it is safe to fail, so that you're willing to try. Where it is like I said before, where you bring the bad news quickly. Where you prioritize speed over perfection, because speed creates value, perfection creates waiting, which is the same thing as not doing something. And a culture where it's okay to make decisions with limited data, because no matter how hard we try, we are always going to be under a fog of uncertainty. And so having a culture where that's okay, and we know how to look very sort of cleverly at what we've got and make great decisions based on real information, or the best information that we can, and not through anecdotes or storytelling that is, sounds right but isn't actually true. I think those are the key pieces to a leadership culture.
Yeah, thank you. I'm sure there's a lot of pressure that comes with being in a leadership role, and arguably more so in our industry right now because margins are super, super tight. I've heard of studios that are running on a less than a 1% margin right now, which is absolutely crazy. How can leadership um, sort of maintain a good relationship and appease investors if they have investors, whilst maintaining the balance of having that creative culture and keeping that relationship with clients? I guess there's a lot of tightrope and pulling and shoving.
It's so good. It is definitely a balance, right? The rope is taut as you pull in all these different directions. The one thing is that I would say is that satisfying investors, and maintaining creative quality are not mutually exclusive. They are not two ends of the same string at all. Why? In our endeavor, creative quality creates pricing power, which creates profits, which is what investors get paid out of. So we should all be in the same game ultimately, okay? And so the question is, are you good at creative quality, and establishing it and sustaining it, with the people that you have, or aren't you? Do you do that poorly? I think that's the thing that we should be thinking about. So yeah, what I advise leaders on is changing the conversation to be around that, and to some degree, and in some cases it is about educating your investors a little bit, to connect creative wins to business outcomes, right? A great creative win that leads to client retention and what financially that's worth. Um, how it attracts great talent and what that is worth financially. How it can lead to, let's say, slightly, this isn't really the right time to be talking about premium pricing, but that's the idea, of course, is that, if you've got the best work and the best tools and technologies and processes, and they want to work with you, then you get to charge a bit more than if you didn't. So it's premium pricing, and connect creative wins to new business that it attracts more clients. So that it's the growth mindset. So you want to be able to, as a leader, bridge the metrics between the creative metrics and the financial metrics, and show investors the roadmap that the investment cycles are going to need to be able to make these things happen. And
Yeah.
then, finally, I would say, easier said than done, but don't be afraid to push back. If the investors have a plausible but incorrect thesis about your industry or about what's happening or about what's happening next, then you have to say so. You have to push back. You have to say that a thesis isn't correct. That's why they have you, is for your expertise, right? And I'm always surprised when we sort of kowtow to kind of Wall Street value creation theses that just aren't actually true, and or are sort of wowed by or mesmerized, by the logic of sort of value creation when it's wrong. And I'm much more interested in those wonderful, and there are loads of them, private investors, and large companies even that have really really smart theses about our industry, where it's going, and how they can deploy capital to make it happen. So sometimes you don't really need to, but sometimes it's really really critical that you're pushing back.
Yeah. Thank you for that. And I'm sorry, I could make this podcast so long because I have so many extra questions for you and a off menu question. But as you touched on education, I was wondering, do you think we still have a way to go to educate our own clients about VFX? Because surely if they really knew the cost model that we're under and the cost of VFX, would they continuously try and push the costs down? Is it because of a lack of education about what goes into VFX, or do you think it's just as simple as they need to save money, they're really needing to push us? It just seems like VFX is the part of the chain that gets all the pushing financially.
Well, it's not. It's not the only sort of piece of the supply chain that is pushed to lower price. No, our VFX buyers, okay, whether they are the production companies or the folks sort of in the studios themselves, they know the business, and many of them come from, actual facilities, so they know the business pretty well. And they know, what's happening or what happens when they push too hard. Um, but I don't think they're actually in control of that. It's a big industry, and the cost of production has to go down, and not for reasons that you and I think about, but for reasons that have to do with a lot of other sort of folks, long before they ever decided how much money they're going to spend on visual effects. So I do think that educating our clients, getting them excited about what we're doing, how we do it, is part of building a lasting and sensible and durable relationship, because things are going to happen, mistakes are going to happen, stuff happens, stuff just happens. And if you invest in your relationship with your clients, you have a better chance of getting through it. And like I said before, it's more likely that they'll actually be able to help in a situation. Let's say you have a rogue director, and are you going to fight, that fight while you think shots never get approved, on your own, or is this a thing that the studio can help with? Well, that depends entirely on the relationship and the context and how well they understand the dynamic and what's going on. And so that openness, that transparency, willingness to, share and educate, I think will help. But no, they read the same papers we do. They know what's going on in the business, and I'm afraid it doesn't seem to do much as it relates to our pricing power.
Yeah. Okay, we've got a couple more questions. I'm
Yeah,
saving my
sure.
big one for now, but with all of your experience and insights, what would you say are your predictions for our industry for the next few years?
Well, I feel like I've kind of given
You have,
spoilers
yeah, relation.
throughout our chat.
Yeah.
Okay, so I did say that I think there's going to be further consolidation as interest rates do start to go down. That means that the cost of capital is going to go down, and there will be more interest in acquisition. I think we will see more private equity involvement in the industry selectively, but I think so. We'll see some more consolidation again from the businesses that were strong, and for the purpose of creating new platforms, new ways of working that don't exist today, or that is very difficult to create or manifest, on your own, without an injection of capital or without businesses that have already done it. So I think we will see more kind of mashups, if that's a fair way to describe it. It certainly wouldn't feel like a mashup, but the idea of sort of bringing companies together with different capabilities into a stronger whole, I think we will see more of that. I definitely think we're going to see more shifting audience behaviors. I know I said I don't really trust anecdotes, but I definitely watch my children as they interact with media as as sort of like, the first point of call for like what's
Yeah.
happening, what's going to happen. I think it just came out very recently that YouTube is now measured to be something like 14% of all television watching on actual television sets, up from like 10% a year ago. This is radical. This is very, very different. And so audience consumption behaviors are changing. But you know what's not changing is how many minutes there are in a day. It's kind of fixed. So if they're increasing their time, on, through in algorithms, okay, and short form content or even long form content, but that was algorithmically sort of fed to you, where's that time coming from? Is it coming out of linear TV? Well, the answer is yes, we know that. But what about gaming? What about social media? What about going out? What about going to the movies, right? What's going to happen there? What are people going to spend their limited amount of time doing? And it's not a single direction. It shifts repeatedly and there are cross currents. So that's, the biggest thing to watch is to watch audience behaviors. And then, of course, that gives you the biggest question, which is where is the value in 3D storytelling, visual storytelling, the craft of what we do? Where's that going to grow next? Is it in sort of concerts and venues? Is it new ways that people will be using their homes? Is it the goggles? Because we've been seeing goggles for years and they've never really caught on, except in specific circumstances. So watching very closely. I don't think I'm able to predict, specifically what's going to happen on that front because I think it's actually going to be disruptive, which means we're not expecting it. Um, but the need for 3D visual storytelling will continue. We're obviously talking about AI a lot, and the first question is, are we talking about AI as a tool, which we've been using for maybe 2 decades and nobody's really talking about because they don't sort of see how we work? Or we talk about AI as a replacement for what we do. And the reality continues to be that at the free and bottom end, yes, we're going to be swamped with a lot of that. But what's going to happen to audience behaviors? Does that mean that they're going to want to watch AI generated, clips all day long instead of going to, a much more spectacular experience? I don't think so. So obviously we have to watch that space. But I think successful studios are going to stay really close to the evolution in audience behaviors because that's what everybody else is following too. And then you'll see, your opportunities come from there.
Yeah, thank you. Very insightful. So bringing it back to you, just to finish off, what is it about what you do that you love, or the reason why you keep doing it? What do you enjoy about it? Because it must be
Well, it's
super.
not because it's easy.
It
I
must be
mean,
there sometimes.
yeah, my job doesn't involve sitting in meetings where people say how great everything is, right? That's not actually what I do for, it never has been what I do for a living. So I've been a COO 3 times and I loved leading business change and growth. It's a fascinating and important and valuable thing, to contribute, to a creative mission. But actually, the best part is bringing the people along sort of with you, working with them to set that direction and then watching them sort of surprise themselves with what they can do rather than telling them sort of what to do. And including, the entire population. I think the strikes were really scary for everyone. And, I did have to sort of explain what was going on to folks who may not sort of pay as close attention to what's happening in the market or aren't familiar with sort of weird things that go on in Los Angeles, California, that they aren't part of. And so helping folks kind of get through it, understand the journey, see the way forward, see how we're responding, why we're responding, what we're going to do. That was really, really valuable for me as a chief operating officer, right? Satisfying in a way that this is an awful time, but at least being able to help people along the way as we all sort of go through it or work through it. As a consultant now, like I said, it's a really new sort of concept for creative businesses. So coming with a better, faster, cheaper answer, right? And one that's right for what our clients need. Obviously, really satisfying. You get to come in at sort of any point on a company's profitability journey, like from their go-to-market strategy to their revenue operations and project delivery and technology and cost structure, all the way to strategic transactions on the other end. You get to work really intensely with them, and for once, leadership, right, which has a duty to kind of stay strong, show that they can do it. This is a place and this is a forum where they can be open, where they can be vulnerable, where they can say, I actually don't know. And I'm not going to tell my investors that. I don't want to tell my employees that, but I don't know what to do next. Is this something that you can help me with? And so for a very fixed period of time, we go on a little bit of a journey together. And then it's awesome to see them sort of eagerly take the responsibility back, say, great, go away. This was helpful. And now I want to do it. And then see them go on to their next challenge. And then same with me, I go on to my next challenge. That is really, really satisfying. The things I've been able to work on have been interesting, incredibly difficult, and really, really satisfying. So it's been fun. Yeah.
Yeah, I bet it is. Because I mean, our studios, some of the CEOs or founders, they're artists first. So they didn't go to like management school per se or
Mhm.
hang out with a bunch of CEOs to learn from them. I guess it is very much learning on the job. So having someone like you must be really reassuring. Um,
I'll say there are things that they shouldn't go to management school for because management school's wrong about a lot of stuff. And there's a reason that they became successful leaders, but it doesn't mean that they don't need another view. It doesn't, you might need somebody to look orthogonally at the same problem and say, but have you looked at it this way? And they say, well, I haven't. And suddenly like new ideas come about and the creative process begins again. So I think that's really important.
yeah, definitely. And anything else that's coming up for you? You going to any industry events or what's happening in the next few months?
Well, I'm transatlantic. I spend a lot of time between East Coast of the US and here in London where I live. So not a lot of events. I missed SIGGRAPH, for example, even though it was like around the corner from my brother's house. But anyway, I didn't get to go. But yeah, we have 11 advisors now, and we have clients in the UK, the US, and in Europe, and we're firmly planted in both the entertainment and the marketing worlds, which is really great. And more sort of these VFX and animation studios are opening up to receive help. I think the thing that's most exciting, to me is I have a growing list of software partnerships. These are companies who provide kind of amazing, kind of niche productivity tools, but they share our ethos, right? And they believe in efficiency for the sake of a creative endeavor. And I've been working with them, not exclusively, but bringing their tools to bear, helping them even, as it relates to the scope of what they do and how they do it, their product roadmaps, their investment timeline. So that's actually been a really interesting and surprising part of what Sevoir Group is all about. And then you ambushed me with the return to work question. That was a good one. I do want to sort of offer kind of a physical locations, not to have an empire at all, but to create and find those neutral spaces, right, where it's a really good place to get out of the business in order to get into the business in a different way, right? So looking at that as an important sort of step for the business as we grow. But the vision's really simple to help creative businesses to help see themselves more clearly and to actually envision what is possible. And that's literally what our name means. And well, anyway, according to Duolingo and a few of my French speaking friends. Anyway. So trying to prove that out is where we are.
Yeah, I love that. Thank you. Well, I've really enjoyed our conversation today. In the back of my mind, I have so many more questions for you, so maybe I can convince you to do a part two. And
I'd love to, Haley. That'd be great.
we do have London SIGGRAPH coming up, so maybe I'll see you there. That's in a couple of weeks. Uh,
That's coming up quite soon. Yeah.
yeah, but for now, we'll stick around for a bit longer. But for now, Daniel, thank you so much for joining today. Really appreciate it.
Thank you so much, Haley.
Thank you.